All right, how's it going, everybody? Hope you had a great week, and I hope you'll have an even better one next week. And if your week sucked, remember that it could have been worse. For example, you could have been of the belief that um, gold has no value and it's a pet rock, and you missed out on 25 years of outperformance. But that's not what we're talking about today. Today, Luke and I are talking about private placements and their effects on stock prices and whether it makes sense for us as mere mortal retail investors to pay attention to private placements and maybe even invest in those. Right after which, by the way, I'll be speaking with Gerald Paneton, a man who's raised close to $3 billion, and he's built a mine from scratch, from exploration to one of the biggest gold mines in Canada. So we'll talk about his life, the mistakes, the regrets, the red flags, the drama, the unfiltered truth, if you will, but also the upside and the good stuff, hopefully. And then right after that, I'm getting an update from Craig Perry, another man who's got many successes to his name and is currently building a copper exploration company in British Columbia, with that being Vizsla Copper. So a long episode, which means I better get to it here with you, Luke, because essentially what we're talking about when we're talking about private placements, you've ran some data and summarized what you came up with, shows that the average 12-month performance of a private placement with warrants over the last 3 years has been a negative 23.3%. Whereas the median is actually way worse. It's a negative 42%. It does get better, though. The private placements that didn't include a warrant, which is something I hope we can talk about, they're showing a negative 12.2% average 12-month performance and a negative 28% median. So I didn't say good, I said better, which is not that hard to achieve given where the warrants once kicked it off with. But again, to note, this is only 3 years worth of data, and the last 3 years have obviously not been the best 3 years in the market. So what are we blaming this on the market gods? Are we blaming it on mispriced private placements? Are we blaming it on Canadian warrants? What are we doing?
Yeah, I don't think you have to blame anyone. I think you just have to make sure that you are understanding why it happens. And of course, you never really know for sure when a good market will arrive and when a bad market will arrive and how long these markets will take. I think end of 2021 is when this data started. Was not the best time to start investing in this business. And then buying a placement at that point, of course, is not ideal either. If you look back, I can look back about 12 years, 11, 13 years of real experience in the sector. And of course, it's easy to say that 2015 and 2019 would have been amazing years to buy placements with warrants. Because if you're ahead of a big run and you own shares and warrants, you win twice. And in good years, almost everything goes up. I made an overview yesterday of the 2008, 9, 10, 11 years after the crash, the financial crash, and there were like hundreds of 10 baggers or even 100 baggers. There were hundreds of 5 baggers. So in those years, having warrants is amazing. In bad years, those financings hurt you way more than financings without warrants, because it completely makes sense, I think, to everyone. If you have a warrant, especially if it's pretty close to the current price, and especially if you're betting on a big discovery, but it's unlikely to happen, then why keep the stock? Just sell the stock and keep the warrant. You have exposure for 2 or 3 years. If it fails, who cares? Because you sold your share already. So it gives you a big incentive to sell the share. It just makes sense to sell the share and keep the warrant. Of course, there are companies with strong investors who will demand a warrant, and they're probably worth the warrant as well. They will keep the share. I mean, the Eric Sprots of this world and the Pierre Lassans of this world, they are not typical traders. They are in for a reason, and they typically have a longer time period than the average retail investor. So it's not always a bad thing, but preferably not a warrant, because you have to think about selling your share. If you sell it, you're out and you're no longer exposed to upside. So yes, for sure, the last 3 years made a big impact. And the reason I looked at it this week is also because I see that private placements actually are well received in the last couple of weeks, and that may be a little bit of a shift, and maybe that's an early sign that we are really moving into a bull market.
I do want to talk about warrants once we get to it, because that's one of the few things I dare disagree with Rick Rule on, and think you do as well to a certain extent. But to the takeaway on private placements, what don't do private placements in bad and neutral markets? Well, that's kind of obvious, but well, depending on the ones you're doing, of course. Maybe there's ways to do it well. Like I suppose there have been private placements that did well.
There are for sure, but I think in terms of timing, and of course the timing is the most difficult thing. But ideally, buying a placement in a bad market, amazing, but then only a year or less before the market turns. But since knowing when the market turns is the most difficult thing, you cannot really do that. So I think if you have the opportunity to participate in a financing and you know the team very well and you really have, for some reason, a lot of trust in what they're going to do, and you can choose to either buy the share in the market for 10 cents or buy the share in the placement for 10 cents and you get a free warrant at the same time, and you're not planning anyways to sell within 4 months, well, you would be crazy to buy it in the market. On the other hand, I buy a lot in the market because I'm buying companies in the market at a price that I don't think they will ever raise money at, because these companies are, they know when to raise money. They don't need to raise money right now, and the share price is just weak because there's no interest. But doesn't mean the company will raise money at this level. And then buying, let's just say at 5 cents, and the company raising money half a year later at 15 cents, then of course I rather own the 5-cent stock without warrants than the 50-cent stock with warrant, in most cases. Sometimes, if it's a 20-30% difference, then they can compete with each other, but I rather own a 5-cent stock than a 15-cent stock, if the situation is not very different. So I think timing is everything, and I prefer to decide myself when I want to buy, and in the placement case, it's the company deciding, now we need money, now we will raise. New investors will often come in. I always look at the number of people participating. If that's really high, the likelihood of a sell-off after 4 months is higher. And what you often see is that towards the 4 months hold period, like towards the 4-month hold day, the stock is going down, even before that period already, because of a bit of shorting, I think. People already sell the stock in advance and buy it back after it's free.
Well, so we're kind of making a list here. That's a very good point that you make there. That's one of the reasons why I don't like warrants, but I'll talk about that as well. But so low number of participants, that's a good takeaway. Like when you look at a private placement, what's a private placement you might want to get involved with? Low number of participants, but no warrants, or at least just a half warrant. There's these private placements that do, a 5-year full warrant. Which is not always great, and there's reasons for that. Again, we'll get to the warrant. But what else? What else do you look for when you look at a private placement? What else do you look at before saying I'm definitely not doing that, or where you're like, oh, okay, it's got low number of participants, no warrants. I'll have a look and I might participate. What are you looking at?
Well, sometimes these details are only available a couple of weeks after the financing is closed. So if I call a company and they say already like 5 minutes after the announcement, no, sorry, we are fully allocated, and I see it's a pretty big raise for a fairly small company, then it's almost certain that they have a lead order. Or sometimes they would even say that in the announcement. I recently bought a company. I'm not going to name it because I really bought it just because I saw a placement announcement. No warrants. Lead order, I think they mentioned. I don't think they even mentioned it in the announcement. They announced that it was fully allocated and that it would close within 2 or 3 weeks. And if you can close so quickly and it's already fully allocated and it's without a warrant, and the company was trading at a sort of low price for the last 12, 24 months. I look at the company, they have no warrants outstanding, pretty interesting projects. I looked at a couple of videos, and I felt like, okay, this story, even though I don't know it that well, there's probably something ongoing. Somebody's going to buy this thing. And I just bought into the market. And indeed, 2 or 3 weeks later, the financing was closed. One name took almost everything. And it was not a very, very well-known name for most people, so you didn't get that immediate share price move after that closing announcement. But I was right in assuming that one person would come in, and that's a good sign because that person cannot just sell the stock; will have to support the company, and I have by doing it this way, I've predicted a couple of times when Michael Gentili would come in without knowing that he would come in 2020 or 2021, I think, because I saw the market, the type of market action, the type of brokers involved, the type of projects, calling the company, nothing available. I think these are all signs, and when I see often 2 weeks after a financing closes that 80 people participated, then you almost know for sure that there will be stock available 4 months from now. But of course, there are exceptions, like the one that we discussed last week or the week before, which is Q2 metals. They have a big discovery, and then a lot of this goes out of the window. Then the stock will just go up.
This is actually a good point because there's differences, right, in private placements. So the good point being who ends up owning the stock and what is their plan with it? Like, do you know? That's something I ask CEOs too. Like, okay, you did a financing. Do you know who's still holding that? Do you know if they're going to keep holding? Do you know what their plans are with this? I mean, you spoke to them when you got them in. Did it feel like there weren't clippers? Did it feel like they're just getting in for, if it's a flow through financing, if it's a live financing? There's differences, right, in private placements. So there's bought deals, broker private placements, non-broker. There's flow through, charity flow through. There's live deals. What have you ran any data on any of the other type of private placements?
Yeah, a little bit, but it takes a bit of work and data, verification to do that on very big data sets. But for sure, bought deals really did bad performance over the last couple of years. But again, those years were not amazing. The last time I did bought deals in detail was in the period 2020, 2022, which was a good period. But I think most of the big deals were done at the top. So that also flawed the data a little bit. But like 70, 80% of the companies went down quite significantly after a bought deal. And just maybe 10 or 15 companies out of the 130 bought deals I reviewed went up. And in most cases, there was a discovery behind it, or there was a big name behind it. Again, a person like Pierre Lassonde or the Gignac family, Lundin family. I mean, the names that everybody looks at. Those backers typically make a difference. And I'm not sure if they bought those bought deals, but they were big investors in those companies, which makes those companies stronger anyways.
Yeah, and it's that 4 month period that you mentioned though earlier that often gets you slammed down, and maybe that might also be a good takeaway or something to talk about would be to strategize buying around private placement. So if you're not able, if you don't want to participate in a private placement, and this is always kind of obvious, and I say it basically in every episode, but use setterplus.ca. It's not the easiest website to work with, but it's a government official website where company filings appear on, and just go through their financial reports. It's really not hard. Even I can do it. And look at two things. Look at their burn rate, look at their cash position, add on to that any drill program they might have going on, or like geophysics or whatever other spends that they might have going on. And it shouldn't be too hard to determine the date range in which a private placement might be adequate to be done. Or go and look at their go and look at their news releases. When was the last private placement they did? Was it 3.5 months ago? Look at the share price and keep paying attention to it over the next week. I think that's kind of what you do, Luke.
Yeah, I look at all the data of the companies I'm interested in. But I think it's also important to think about the imbalance of, and this is such an illiquid market. And if a company just trades $40,000 a day, or maybe $20,000 a day, or sometimes even $5,000 a day, and they do a $2 or $3 million financing, it's already pretty incredible that these companies can raise that much money. But if they give away a full warrant or a half a warrant, and there's 80 or 90 people in that financing, and you assume that at least 30 or 40 are going to sell the shares after 4 months, just because it makes sense. Why own the share and take the risk if you can sell the share for the same price or similar price and keep the exposure? Is what a lot of people do as a strategy. How can $40,000 of interest every day, pick up on the $2 or $3 or $4 million that will be sold into the market after a number of months. And I made this image over here, this imbalance image, a couple of years ago already, I think 2 years ago, of a company that went up 3x or 4x in that short period, and the 3 million placement was now worth $12 million. Of course, people have a 4x and still have the warrant. Then there was $40,000 of volume in the months before on average. So now $12 million suddenly may hit the market. It's almost impossible for the stock not to go down unless something amazing happens, discovery or something that makes the market very excited. And again, there's always exceptions. Like right now, there's a couple of companies that actually go against this trend. Heliostar had this phenomenon a couple of times where people really sold into the 4-month hold period, and then also afterwards sold a lot of stock, and the stock really suffered from it. But right now, Heliostar, for example, is running, it's approaching a 4-month hold date, and or like the release date, and the stock is really going up. I think quite smart of them to now raise money just before that date with Eric Sprott at 60 cents, which sort of supports the stock a little bit. I mean, now the company is financed again. Eric Sprott is putting his name behind it. So maybe that will also soften the impact a little bit if there's any impact. But right now, the stock is strong right into the moment the shares will come free trading, which is kind of unique. You don't see that very often. And I saw the same thing with Gladiator Metals. Stock is really strong, but also a free trading date is coming up. I think these companies will get a bit of an impact. Almost impossible not to, but the market seems to be turning a little bit. Things are stronger, and that's why I'm saying it's also a little bit market depending. It's not always Q2 metals we looked at last week and the week before. Lithium discovery, lots of stock against it, I would expect, after so many financings and share issuances. But also it stays quite strong because of the good discovery. So it's not that it's a complete, a dry fact. You still have to look at what's happening with the company, and it will not always go down necessarily, but it's a very dangerous moment to trade a company or to buy a company when so much stock is free trading or coming free trading very soon.
And this is exactly where we can talk about warrants, right? I have my opinion on them, which is again, potentially one of the very few things I dare disagree with Rick Rule on, given that he's been making money in the sector for about twice as long as I've been on this planet for. But we talked to Rick about warrants. I believe I think it was actually the first episode, Luke, you and I did that restarted the show. Had Rick on. It was a fun episode. But essentially it's a couple of things that I wrote down, but there's the added dilution that I don't appreciate, which is kind of obvious. But then there's warrant clippers, right? Which basically means my interests are not necessarily aligned with my co-investors, which could be buying into the private placement that I am, not because they believe in the shiny rocks, but because they want to flip the stock and cash in on the warrant, and thus creating downward pressure on the share price, and thus therefore, I suppose, kind of hurting me, but also the company's ability to finance down the road. And so that's something that happens almost all the time, unless the company's meticulous about where they place those shares and those warrants. Then there's a warrant overhang, of course, which acts as a drag on the share price if the company delivers and creates some excitement even still, unless, again, as you mentioned, the company becomes kind of a total rocket ship emoji, new discovery, whatever, that pushes it up multiple times, which rarely happens, as discussed last week. But then, of course, you have the data that the PPs with warrants that you just showed me, they typically perform worse than the private placements without warrants, right? So I actually didn't intend for this to be a rant on why I'm not crazy about warrants. But what do you think here, Luke? If warrants stopped existing tomorrow, would private placements perform better, or will it become even harder to raise capital for companies?
Well, both, I guess. People are used to getting warrants or options or benefits to invest in a company. I just think that it makes the game a bit easier. Now you always have, especially in an illiquid market. I think warrants and shares are a bit similar. If you have many, many shares outstanding, you still have, which is a bit weird, of course, in a way. Who cares? 500 million shares at a cent or 50 million shares at 10 cents. Isn't that the same thing? Well, in reality, the dynamics are different, I think. In the Australian market, you don't notice it that much, but the liquidity is really much higher, and that's why I think it works. In the Canadian markets, liquidity has been very low for years, and it's just very difficult to get a stock to go up on okay news, especially if you have warrants, because people have that incentive to exercise them and sell them. And that's why the warrant price is very often, but not always, the high price for a period. I think raising money is probably more difficult because people want that warrant. It's just part of the culture. People know about it and it will not change. But the simple fact, I sort of repeat it again. If you only own a share and you are still interested in that company, you didn't give up on it. If you sell that share, you are out. You can be afraid of missing out when they are drilling a project. If you do have a warrant, and even if you make the mistake of selling just before a discovery, maybe it's not a mistake, but you make a decision, you will sell the share, you have the warrant, you still feel okay. Even though they made a discovery, you could have made more money, but at least you have that warrant. So your decision becomes way easier to sell. If you only have the share, the decision is more difficult. And I think that's for everyone, including institutions, including private individuals. So I think it is better not to have warrants, but it's impossible in difficult times to get people to invest in these risky businesses, not getting a sort of a free 5-year option. And I think I can imagine Rick Rule's argument, by the way. I mean, he argues, why can the management own a 5-year or a 10-year option, and me as a capital provider keeping the company alive and financing that company, why am I just getting a share? And that's a complete strong argument that I would have difficulties with arguing if I was sitting and negotiating with him as a CEO of a junior mining company, because I think it's a fair argument that he made there.
Well, how do you think junior mining CEOs should negotiate? Because it's easy on public chat boards and whatnot to blame the CEO and be like, oh, they gave a full warrant they shouldn't have, or maybe they're trying to rip us off, or whatever it might be. It's very easy to say that, I find, and it doesn't take too much thought. But trying to walk in someone else's shoes as well here. What does this look like from their perspective? How should they, negotiate a deal where they don't give a full 5-year warrant?
I think a lot of CEOs have no financing abilities anyways. I mean, they reach out to companies, to banks, to help them finance. That's why they do a brokered financing sometimes, or a bought deal. Or, I mean, if you completely have enough capital behind you and those people are willing to invest again, and you think that it makes sense to invest with that network, why would you give that work to someone else and pay them a fee for it? People get a fee because they deliver some value to you, and apparently you're not able. And it's not a bad thing, by the way. I mean, I see good companies do brokered financings, but it means that you need more money than you have at your own exposure rate, right? But at that moment, I think the Lundins would always be able to get, their network to invest, and they would not necessarily need, in most cases, to have something brokered or bought deal, because they have that money in their network. So yeah, to your question, it's very easy to say, but I mean, people need to finance. You have geologists running companies, and they are very good at rocks, not very good at finance, and they need a warrant to attract people, or they need a banker to attract people to invest, and which makes sense. And there's 2,000 people, 3,000 different companies trying to finance every time, and sometimes I feel like it's a miracle that so many companies succeed in doing so. So it's a completely logical outcome of so many companies trying to do something like this.
Well, here's something that you and I can both agree on with Rick Roll, and that's that we just have too many companies. And Rick Roll says that the sector is actually over-financed when you look at it at its whole, with all the companies that a lot of them, I don't want to say the vast majority, but definitely a lot of them just don't really do anything. So, well, your advice, I suppose, to CEOs here is good. It's just become good at financing, which is not
or get people involved. Get people involved who are good at it. Right. And I'm arguing this. I am running a small company myself, and I know what I am good at, and I also know what I'm not good at. And and I cannot really hire like 5 new people to help me with this because the company is too small for it. So I think it's in a way a problem that companies also have. You cannot necessarily, for a company, it's a bit easier because you can issue options. They are tradable on an exchange, but you have to realize what you're good at and what you're not good at, and if you can hire the people to support you with the stuff you cannot, you're not good at. And if you are a geologist and you're really good at that specific part of the job, but you have no feel for financing, you have no feel for promoting, it is very important because there's so many companies telling stories about what they may find, and in most cases there are many people better at it than you. So how can you as a geologist attract people to invest in your little company? I think very often people think they can do it, but they cannot really do it, and they harm the companies in the process by thinking that they don't want to spend money on people doing it for them.
That's an outstanding point. You essentially, and I listened to that thinking about my own business, but you have to hire people who are smarter than you in a certain aspect of the business, not people who are, dumber than you essentially because you want to control them, which apparently happens a lot in big companies out there. We only have a couple of minutes before Gerald comes in here, Luc. So what else did I want to ask? Oh yeah, I wanted to ask you, I know that that's a deal breaker for you. I mentioned warrant overhang, which is one of the reasons why I don't like every financing having warrants, because it just builds that overhang there. What's sort of a cutoff point for you where you're like, oh, if warrants are 20% of the fully diluted shares, I'm not touching it, or 30% or 40? What's that cutoff for you?
Well, it depends on the exercise price. Sometimes I pull data from reports and I can see that a company has 60 million warrants. But if you then look at the exercise price, a lot of companies went down a lot. And if a company went down from 50 cents to 5 cents and now has 50 million warrants outstanding at 50 cents, I don't care that much because it will have to 10 back before it gets there. And I'm happy to sell by that point. So, but I think it's also, even if the warrants are no longer a problem, it gives you a little bit of a concern because they could do it again. If they were issuing so many warrants back then, why wouldn't they do it right now? For me, it's always an indicator. But the exercise price is important. If a stock trades at 10 cents or 20 cents and the warrant just trades a little bit above that, it's very, very often a deal breaker for me. I have probably of my 80 or 90 financing or 70 financings I've done, there's probably just 10 companies that really did well for me. If it's not less than 10. And a couple of them did have a warrant, and those warrants were helpful to me, a lot, very helpful. But most of the deals I did, and I think in the beginning I did a lot of them, maybe a little bit because of the warrants. I felt like, well, it gives me 2 years of exposure, and I didn't have the same confidence level. So for me, the problem is often when the warrant is too close to the current price, and especially if I know that there's many people going to participate in the financing. The more exclusive a financing is, the better is, of course, to be in such financing.
So you basically want to be in the financings that wouldn't allow me to get in. So maybe we can do it that way. Like if you have a financing, you're like, oh, can you let my friend Antonio in? If they say yes, then you just ignore the company. If they say no, then you keep looking at it. Look, this is a great overview. Next week, we should talk about what you mentioned, saying we shouldn't look too much in the past and what's happened before. Let's look into the future. What's going to perform well? And you've made a great list on this. Gerald is waiting for me in the waiting room, though, so I'll let you go. But next week we should talk about that. That's a little teaser for people to stick around for next week. But thank you so much for doing this.
Yep. Next week we will find some winners for everyone, but everyone takes their own risk.
All right, Gerald, first of all, thank you for being here. And you and I sat down for a conversation on gold Terra not too long ago. And we also have another YGT update coming soon, hopefully. But today I want to zoom in on the man who took an exploration project and turned it into one of the largest gold mines in Canada, and everything in between, and maybe a little bit about what happened afterwards, because a lot happened. But what I'm wondering here is that you're one of the few, and I don't say this, I don't mean to blow any smoke, but it's I mean, you take 100 people, how many of them have done that? Not many. I mean, it's 1 in 100, or maybe even more, like 1 in 1,000. I don't have the data. But why? Like, well, what do you think? What defines success? Like, why were you successful and the 1,000 other people who tried weren't?
Well, thank you, Antonio. It's a nice I don't want to take anything away from everybody that works hard to succeed, okay? Because everybody is trying hard. And I think what defines a success can be spread on many different things. There's no question that success can come from many people, but at the same time, if I had started a company, a junior company, when I was 25 years old or 30 years old, I would have missed on the schooling I got from the moment I left the school into, say, the age of 48 or something like that. I think I left Barrick at the end of 2005, which means I turned basically 48 years old when I left Barrick. And who you work with through your career teach you good thing and bad thing. The bad things that you learn is because you don't want to repeat them. The good thing is just accumulate itself in your definition of your profession. And whatever I work for Vior Mazarin, great people, junior company from 86 to 89. 89 to 93, I worked for Placer Dome. Again, I learned something there. There's no question I learned a lot, but I learned more about what not to do sometimes in that 4-year segment. I met some very good people. I also saw what a company can do to destroy value and not see the value. Think about it. Detour Lake was a Placer Dome asset. And in 1998, they sold they decided to shut down the mine. And then they sold the property to Pelangio. And Pelangio basically took it because they had been involved around the mine all those years. Ingrid's father, I forgot his first name, but Mr. Hibbert basically was the guy around the Detour Lake. So it's just show you like a little bit, what is the Detour story? Fine in the 1980, Campbell Resources, then end up in Dome portfolio. Placer and Dome merged in 1987. I joined Placer Dome in 89. I was in exploration. I was involved in more in Quebec exploration for Placer Dome out of the Val-d'Or office. And then I moved into Timmins for the last part of my tenure at Placer Dome. And Detour Lake was one of those assets that, you have to remember, gold went down to $256 an ounce in September 98. And in September 99, it was still $256. The mine was not making any money. It was on the ground. The ore was going away from the shaft, and they shut down the mine. They were not making money. And they had difficulty with the continuity of the high grade. So they were mining, I think, something around 4 or 5 grams. And think about it, 256 gold. Today we're 27.35. That today, actually, by saying 27.35, it tells you that we're October 21st, 2024. It's at 100, it's 10 times, it's 10 bagger from that in less than 26 years. So it's pretty impressive gold run. Now, going back to Detour Lake. So the mine got shut down. Pelangio sell it, and Pelangio had it from 1998 to 2006. And then in 2006, the CEO, Mrs. Hibbert, decided to sell, to divest. She wanted to do something else. She had been on the Detour Lake asset for 5-6 years in a difficult market, but the market was turning back then, and so the story of Detour is kind of like it's kind of like project fatigue in a big company. The project is not delivering. The same thing for shareholder fatigue, actually. The project is not delivering. That's one of the issues that I have with Gold Terra currently, is that the story is fatigue. It's been in the hands of previous management. I came in 5 years ago to this date in October 2019. And in the tough market. So people just get tired. They don't realize that you're still moving the project. But anyway, it can be tough. But you go back to Detour, Lake story, it was project fatigue, shareholder fatigue, and management fatigue. So they wanted to do somewhere else. And to kudo to Ingrid, she didn't let it go that easily. She got 50% of the project through her shares in Detour. She had 20 million share of the IPO. So she was protected from an upside, which basically was created. But I saw the vision, and going back to vision, then we can, I'm not sure if you want to say something now, but how did I pick that project?
That's important. Like, I kind of want to go through the whole process and then see what happens in, I believe you left about, 11 years ago now, in 2013, which is also, it happened kind of abrupt. So I want to figure out why that happened as well. But let's build our way up to that. You got this project. Why did you get this project? Because I suppose part of the reason why you were successful, where again 100 or 1,000, how many ever others weren't, well, part of that are the rocks. It's because the project worked, right? It's not only that, but it is definitely part of it. So how did you pick that project?
So I looked at it a few times before, and gold was 300. It was an underground mine. The first time I was asked about Detour Lake, I said, "Oh no, it's a dog. It's like never worked. It's not working." So what changed my mind between, say, January 2006 and April 2006 was just going back and looking at all the section. And then I realized in detail in the section that the system was wide. But where do I go? It's like, I'm sure a lot of geologists would have come up with the same thing. But you still need to have this vision that maybe it's not an underground mine. Maybe it's an open pit low grade. But where did I get all this experience? So after Placer Dome, I went to Lac Minerals, and we were purchased 1 year later by Barrick, and I spent 12 years at Barrick. And under the the leadership of Alex Davidson, which was my boss for 12 years, I was in charge of a lot of things in Canada, and mainly Eastern Canada, Ontario, Quebec. But I was doing a lot of valuation. And I guess I must have earned his trust, because then I started to go elsewhere. And then eventually I moved to Toronto. And then over a period of about 7-8 years, I scouted the world in different places, with him, without him, and evaluated so many projects, visited so many mines. But even at the beginning of my career, in the first 4 years of my careers, I visited every gold mine in Ontario and Quebec that I could get access to it. My goal was to visit an underground mine once a month. Okay. And part of that period of time, I was doing it with Jean-Marc Lulin from Azimuth, because we worked together back at the Vieira Mazarin, and with Jacques Bonneau, which I have a lot of respect for. So when you look at those people that you work with, they guide you, they teach you, you listen, you take whatever they tell you. You may not record everything at the moment you're there with them in the mine. You talk to the mine geologists. What is your challenge? What's the difficulty? And then you start working with Mr. Louis Dion at Barrick, which is another mentor of mine, a mining engineer. Since 1994, Louis Dion has been involved in every project or investment or company that I've run. You can check. I mean, he was a director on pretty much, from Detour to Newcastle, to even Prophecy Development. And so I brought Louis with me, and he was with me again at Gold Terra at the beginning. He left, but he's still around. So I can always pick up the phone and call him. There are people in our industry that have so much knowledge that you need to tap into those people. And then that goes into the buildup of your directors and your management. I did not build Detour alone. I built Detour with a team that I put together. But I have the vision, because if there's one thing that I do have, is I can see 3D. I don't need a computer to see 3D. I can see the volume, the size. I can also scale what the tonnage should be for the mine, whatever open pit or underground, without a computer. And that's what Louis Dion taught me. for example. And it's also about what is the value. If there was 1.5 million ounces, and it's an interesting part, right? Back then in 2006, when I negotiated with Pelangio, with Ingrid, we set to pay $50 an ounce per indicated resources when gold was $400, $450, which means 10%. The value of an indicated resource should be 10% of the gold price. $50 versus 450. So how come today we're valued at $7 an ounce in the ground when gold is $2,700? How come we're not getting $270 an ounce valuation? There's a huge disconnect in today's world. Okay, but going back to people, the people I was surrounded that I work with were gifted me with all their experience, and I swallow it like a sponge.
I'm sorry for interrupting here, Gerald, but that's where why I actually wanted to ask you those questions, because I know that's the answer, but how do you do it? I know the team matters here, but how do you pick the right people? Because also after Detour, you've gotten involved in, there's another company you got involved in at the time was called Prophecy Development Corp, and then you quickly left after that. And so it seems to me like you know how to pick the right people to get involved with. How do you do?
But I walk away very quickly if I find that the match is not there.
Well, how do you know? Like, and what can I take away from it as an investor? You know, looking at stocks myself.
I wish I would be able to do it. You know, sometimes you meet a person and you go for dinner, or you spend a day, or you go golfing, or whatever you're doing. Doesn't matter the activity. Actually, golfing is an interesting part because you can see very much the style of the personality. Because over a period of 4 hours, you see somebody that is by himself with a golf ball, and you can see the personality. Easy, what type of personality, without going into the detail. But I wish, for example, in prophecy development, I kind of like saw a problem at the beginning when I met the first time the management. But look, I had, it took me a while, but I wanted to help. I wanted to help the guy because I found that he had a good idea. He picked up a good property, and vanadium was very good in my mind. It was just a matter of putting this asset into a company, and this is where it stopped. Basically, I could not just take the vanadium asset into one company separate from what he was doing, and this was his company. It was not mine. I was there to help, but sometimes if you help, you want to help with certain basics, and if those basics are not there, or you feel that you cannot work with the person, you just walk away. I mean, this is your company. I'm not gonna take it away from me. You can keep it, but you're not gonna get my help anymore. So I walked away very quickly. Not quickly enough. I wish I would have been able to quit before it became public that I was joining the group, because it's a negative on my resume, but my intention was to help.
So, but how do you know to walk away? Because that's what we should all do. I mean, as an investor, you get in a company, they have an unanswered question, the CEO tells you how they're going to answer it, and then they fail to deliver. You should walk away. But how do you know, and how do you actually do it yourself?
Of course, behind curtain, when you have a board meeting and you discuss things, you say, listen, this is the way it could work, but it cannot work that way. So you choose between working on something if it's the way it could work. If you feel that there's something wrong, you have to mention it to the board. You cannot go. It's like, why did I lose my job at Detour at the end of 2013? I was a scapegoat. I was a scapegoat. And why was I a scapegoat? Well, maybe because I didn't have enough friends on the board. That's one very famous person told me, said, you have to have more friends on the board. You have to manage your board. You have to understand your board. And it's a very important, but when I started Detour, I had some friends on the board, but it evolves. The board evolved, and I had some very good supporter at the board, but not enough, and it went away from me. But they lose a champion. And there's one thing that defines people: leadership and being a champion of your project with a vision. That doesn't come by itself. You have it or you don't.
Well, it's because I believe when I looked into the story, not to go down that road a little bit, as far as I understood it at the time, I was obviously basically in kindergarten at the time, not really, but almost. But you got blamed for underestimating. You got blamed for underestimating the challenges of growing the mine, ramping it up, particularly managing costs, right? And then there was concerns that you'd set overly optimistic targets and timelines that resulted in hiccups, operational hiccups, if you will, and then cost overruns. And then the stock started falling from that. Was there
and gold went from $1,700 to $1,100 in less than 3 months, from February to April 2013, in our first years of production. So the stock went from $20 to $10. We had to do financing because the chief operating officer back in the days did not warn me long in advance that he will have a shortfall of $100 million. So part of my team failed. And at the beginning, when you start a mine of that size, every time you start a mine, and first of all, we reached commercial production in the time we were supposed to reach it, 6 months. We declared commercial production in the Q3 2013. But the recovery was not 91% in the beginning. We were having problem left and right because it's a brand new mine. Every time you start a mine, you have objective, and you're never conservative enough when you start the mine. It's a challenge. It's a big, big challenge. So can you just blame one person? Yeah, I'm the spokesperson of the company. My vision at the end of the day, I built 3 mines. Okay, they all went well. Sulawaka, Puswagi, Detour Lake, all went and did not fail. Were they perfect? No mine is perfect. But today, Detour is the largest gold mine in Canada. So the 30 million ounces that we found was there. I put a team together at Detour with the best I could at the time. And would I've made some change? Possibly. Did I make some mistake at Detour? Oh, for sure. I'm not perfect. I definitely made some mistake, and I know exactly which one.
Which one?
I'm not going to go to that route. I just learned a lot. And I learned for a better Gérald Paneton. I learned for being even more mature person. This was the first tenure as a CEO that I had. Beside Continental Minerals, that was only for a year. When I left Barrick in 2006, I was running a project also in Tibet, in China, Porphyry copper, that got sold to Jinchuan. So it was a success again, but I was not necessarily I was a good driver of the bus, but I was not necessarily, it was like more of a Hunter Dickinson company. And eventually our work paid off and got sold to Jinchuan. But the mine is not in production yet. Or maybe it is, I don't know. But Detour, I know exactly every one of my misstep that I may have made, that I could have made a difference. But at the same time, my tenure over 8 years, I deliver from A to Z, except the miss on building a instead of $1.3 billion project, it became a $1.5 billion project. So we went overrun, but we built it on time. So there's always a balance. When you build a mine of that size over 26 months, you either build it on time and it costs you more, or you don't build it on time and it still costs you more because you took more time. So I think the team was very, very good. Was it perfect? No. Nobody is ever perfect. But you learn from those mistakes, and I think it's important.
What would you have done differently than in that case? And just looking back at your life as a whole, and maybe talking a little bit about regrets, and not necessarily regrets, but stuff that you would have done differently if you could go back. In terms of, it could have been studies and jobs you took on, stuff that you did in your career. What's something you would like to change?
Not much. I'm really, really happy about what I've done. The only two things that I've done that I wish I would have not have done was I'm genuine person to help people. Anybody who comes to me and asks me for an advice, it's free. I want this business to be successful. And I don't want this business to have failure in general. Okay, because any failure in our industry, which is not easy, is tough. So building a mine, when you go from exploration to build a mine, which basically was taught me at Barrick, I was in a very good place to learn my first mine because I had full support of Mr. Alex Davidson. And from A to Z, when I was able to do Tulawaka, except building it, I was, I put everything together all the way through the permitting and convincing upper management at Barrick to do a small mine, which was not a small feat. I mean, I was sitting in a room with people. I could name all of them. And, having this can be difficult. When you look at all of this, it's a challenging world when you try to put a mine that is 100,000 ounces a year in a company that wants to produce 8 million ounces a year. But we know we did it, and we showed the world that Tulawaka made money. Not a ton of money, of course, but it made money because it's important to be able to do small and make money because it's the basics of making money. It doesn't matter what project you do. You need to make money with that project. And so the steps that you take for putting a mine together, A to Z, are the same for every project. But at the end of the day, is the cash flow is positive, and can you deliver it?
Knowing all that, do you apply that knowledge in the open market as well? Like, are you out there buying stocks and helping to finance other companies, or do you just focus your efforts and capital on Gold Terra now?
I like the market, but compared to the $2 million that I've invested in Gold Terra, no, I don't invest. I might, if I see a discovery, I look at it, and it's a momentum, and it's a good discovery. And there's been some in the last couple of years. We've had some good discovery around the world. We had one in Brazil. There's also a couple in the Golden Triangle. There is Snowline in northern Yukon. They're beautiful little discovery. I mean, but to make a discovery and to put it in production is two different things, right?
Yeah.
So yes, it's the Lassonde curve. You look at Pierre's curve. It's very simple. You make money in the discovery, and then when the discovery is made, you go down because you have no momentum anymore. And then until you build it and go back in production, look at the stock price of Detour through the 2013. I mean, look at the smartness of 2008. We started the company. The smartest thing we did at Detour was to put this into a brand new company. Okay. The asset was valuable. The vehicle was tired. I called it like a car with 3 or 4 flat tires. It does not move anymore. It's a nice illusion. You can have a good asset, but how do you go forward? And actually, I wanted to do this with Gold Terra in the summer of 2019. I said, this is a great project, but we need a new vehicle because your vehicle is 5 years old and it's tired. And so my mistake is to have taken a job on a bad vehicle with a good asset for Gold Terra. And I have to live with this bad vehicle and make it through a threshold of 2 million ounces on the con mine to make it work. But you look at Detour and what Ingrid and I negotiated in April 2006, or until we signed the deal in August 2006, with a 6 months closing and an IPO, was a brand new company, fully funded from the beginning, with $35 million in cash. I was spending maybe $500,000 a year. So basically, I had 5 years in front of me without raising any more money. So giving her 20 million share, raising 10 million share at 350, because there was already 10 million share in the company, was, in my mind, one of the most successful strategy that we put together right at the beginning of Detour. Then the gold price goes from $450 to $700, $800, $900 in 2007. In February 2008, the stock is $16. I raised 4 million shares at $16. Remember, $350, $16, 1 year. So I raised $60 million.
Did you think
and
you
then I
raised?
still have about 25 in my bank account. So in the summer, in June 2008, the stock is $20. And in September 2008, what do you think the price is?
What was it? $3. Wow.
And how much money do we have in the bank? $85 million. How many shares outstanding? 44.
Wow. That's a stark difference with what you have right now.
That's what I said to you. I said it 5 years ago. This asset is very good. It's amazing. It's completely, nobody likes Yellowknife. It's a tough story to sell. I have a bad share count. After, currently $330 million. If I raise more money again, it's going to be a depreciated price. But is the asset is valuable to fight for it? That's the question that you ask yourself. Is it a winner or a loser? It is a winner. There's no question in my mind. And I'm a fighter. I don't give up. And we're going to get through. And anybody that wants to join is welcome. It trades publicly. But I can tell you, when you have a valuation of $7 an ounce in a market where the gold price goes up because of physical demand, that physical demand will translate eventually as, can we find more gold? It's very simple. There's no more physical gold. Try to buy physical gold. Sometimes you see, oh, sold out, sold out, sold out. Oh, there's production. I mean, there is. But the demand is outpacing the supply. And eventually, those projects will have to go in production, or those assets that are somewhat valuable. And the ones that are closer to town, the ones that are already permitted, like Yellowknife, may go in production much faster than you think. So there's a lot of positive. But my negative that I carry with Gold Terra is the share count. I inherited a company that was tired, with tired shareholders that don't want to put more money anymore because they got burned. Think about it. If you've been in the story for 5 or 10 years, it's a long way. I've been in it for 5 years. I've already put $2 million, and it's worth, 1.5. Sorry, not even. Sorry, it's worth maybe 350. So I'm down 1.6 million.
Wow.
And I don't have any stock option. I align myself with investors. I'm not there to take advantage. I'm there to build a mine. and build a project and create value for my shareholders.
This one of these days, I have to meet your wife to see the woman who can keep being with you after being down 1.7 million. I think she's the real hero here. What is
no, she's not the real hero. She tolerates.
But that's not easy. At least that's what my wife tells me.
No,
What's a bad vehicle though, Gerald? What is a tired? You mentioned a tired and a bad vehicle. How do you define that? What are the criteria?
In Canada, if you have good shareholders, you're fortunate. Okay. One of the things I've never done at Detour to explain the success of Detour, I did not do any flow through investment at the beginning. I did some towards the end, a little bit, but the flow through price was $40 a share, right? So the stock went from $350 to $40 in September 2011, and we did some flow through with a premium of 30% or more when the stock was $30. But the first deal that I was offered in December 2006 from the banker at Dundee was flow through $2.70. And I said, take a hike, I'll go and finance it myself. And I went on the road and raised the money. Okay. And why are we doing PP these days? Why? Because the bankers will take $750,000 every time you do a small financing. How can you do a financing of $5 million while you're giving 20% to legal fees and bankers? So in my mind, flow through in Canada is a problem. You can do charitable flow through with the back end, but the traditional flow through is a big mistake because people buy it for tax purposes. So you need to have somebody who buys it, the back end, for a long-term process. Because in this market, if you don't have a long-term vision of 3 to 5 years, don't get involved. Stay away.
I wish everyone thought about it. I think about warrants that way too. That's a different topic.
Is a ceiling to your stock, and not everybody, but some people, what they do with the warrants, not everybody, because I don't know the story, but I know that some mutual fund manager they want a warrants because sometimes what they do is that they sell all the share and keep the warrants and an upside, but the upside goes away at some point. And in this current market, I don't think there's too many warrants being exercised. And warrants is just additional dilution. Like I do stock option to attract talent people. Look, our geologists, our technicians are located in Yellowknife. It's an expensive city to live in, maybe 20-25% more expensive than living in Calgary. So there's a cost for having people there. But I don't have to fly them. I don't have to feed them, to lodge them. They live in Yellowknife. That's a big bonus. And that's how you build a company. You build a company. Look, we have a very good structures at Gold Terra. We're trying to put as much as we can in the ground for drilling. And despite a market like this, look, we got the extension from Newmont. We're doing everything we can to move the project the best we can in a tough market.
What do you think in that case determines your success here in the end? And maybe it's a better way to ask this question would be, because you just mentioned that it's a tough story to sell. You mentioned, Yellowknife and the shares outstanding and whatnot. How do you balance over promising with delivering stuff? Because if it's a tough story, you have to go and wave your hands more, but you don't want to do that too much and then under deliver.
You don't over promise ever. And I don't think I overpromise at Detour. Maybe because today the mine is producing, and we found 30 million ounces of gold back in 2013 when I left. There was 30 million ounces resource, including 16 million ounces in reserve, and that's what I left behind me. And a mill that is still running today, 11 years later. So I don't think there was any over promise that was not delivered. the only place that my only faux pas is having to do another financing in June 2013 because we were about to run out of money and we need to cash up. And I was not supposed to raise more money. And I still remember one of my shareholders that came at $28. The next meeting after I had to raise money, he looked at me and said, "You told me you would not need to raise more money." And it comes back in your face very quickly. So that's the faux pas that I had to digest, accept, and fight and find the money. It was not, it's a teamwork, right? If somebody in your team is realizing something and you don't have a big cushion, it's a big learning curve. Look, we built Detour for 1.5 billion US, and Côte Lake was recently built for over 3 billion, and it's a smaller project. So cost of project have gone up a lot, especially post-pandemic as well. When people ask me how much it's going to cost to build a mine in Yellowknife, I'll give you a number, but it's plus or minus 20 to 100%. Right? It could be between 200 to 400 million dollars. It's very difficult to build a project today. So that's why a smaller project makes a lot more sense. Think about it. A volume of rock like this for low grade and a volume of rock for high grade is less risk. Now, a profit margin like this means that your volume has to be there and you need to deliver. Well, when the margin is like this, your small amount of rock that you're moving, you have less risk and a better margin to cover your mistake. Because don't get me wrong, every mine is a problem. Every mine will have challenge because you're going there for the first time. It's not like something you're manufacturing and you find out in the first 3 months. Like in manufacturing project, you're manufacturing your project, you'll fix everything and it'll be good for the next 5 years. That's not a mine. A mine, you're always going to have some surprise.
But at the same time, how do you deal with, getting investors excited while also telling them these things? Because these are the hard realities of mining and bringing projects online. Most won't make it. So how do you balance that? Promotional.
Detour and Canadian Malartic were built in one of the best timing period that we've had for the gold price. We went from $450 summer 2006 to $1,900 an ounce. That is 300%. Okay. Which means to repeat the same type of revenue or value creation with the gold price, you will need to go from $1,500 an ounce to $6,000. So when people think that, with gold over 2,000, the junior market is going to wake up, it's going to wake up and be very, very important when gold is over 3,000 at least. That's my take. I might be wrong. I might be right. Tier 1 project in a world full of problems. Being in Canada, like the first thing I did when I left Barrick was, I'm not going anywhere in the world. I'm going to stay in Canada and the US. And that's exactly what I did. I had zero intention of going anywhere else. I mean, I'm wishing good luck to everybody who wants to go elsewhere. I've done it with Barrick. And remember, Barrick used to produce 8 million ounces of gold a year. And now they are producing 4 million ounces. What happened? It's impossible to maintain the cap at 8 million ounces without buying, you cannot find enough gold. When you produce 8 million ounces a year, you need to find 20 every year. You need to replace the 8 and you need to show growth. So it's impossible to carry on. I prefer the smaller model of putting a good project together, creating value for your shareholders. Even if you produce 150,000 ounces a year and you're making money, you're creating jobs, you're sustaining your economy. Canada is a natural resource country, has a lot of potential. across Canada. A lot still to be discovered. Sometime more remote, sometime close to town. I believe that Yellowknife is underexplored, has not been explored properly over the last 20 years. Even my exploration effort today are a very small part of what we could do. We could spend $5 to $10 million a year in exploration. I've already spent 11 million as the end of 2023 on the Con mine property. It's not bad for a guy that has been, on the project for a couple of years to have spent already that amount of money. So we're drilling and we're finding gold. Remember, the Con mine had 0 ounces 3 years ago, and now we have 500,000 ounces, and that covers the first 6 years of operation. And now we're building for subsequent years. So it's like year 1 to year 6 is done at Gold Terra. Now we're building year 7 to year 20.
Yeah.
Not a bad start.
What's the toughest part of your job in doing that? Like, what's the toughest part of an early stage junior CEO in this market?
I think the regulation have compromised our sector badly. No fund without a minimum market cap will invest into companies. Minimum could be 50 million up to 150, $200 million market cap. In most of the people that have money to support this industry. So I think that is an issue. The second issue is also the creation of the gold ETF for juniors. So instead of buying juniors, you have somebody knowledgeable. Look at all the fund. They've all disappeared. I would like to see the number of funds that were existing in, say, 2005, 2015, and 2025. And it goes like this. All the generous fund, instead of buying, they buy the gold, the GDX. Because somebody like Joe Foster's company and team makes a decision for them. So they don't have to. Look, RBC Asset Management used to be run by a geologist, a very good geologist. And they were doing very well, very smart guy too. But now, redemption are still existing in this current world. And the reason why gold price is high is because of physical demand. The gold company are still very well discounted compared to the gold price. So there's some re-rating coming up in the future. Unfortunately, the junior will be last to be re-rated. It's a process that goes from the gold price to the producer, to the junior producer, and eventually to explorer developers. But we have to keep fighting. If we believe in your project and you have a very good project, like we do, we have a very good project, a solid one, that will eventually be a mine. You keep fighting. Because we adapt to market. We don't make the markets.
We adapt to markets. We don't make the markets. I think that's a very good point to maybe end the conversation on, because you've given me more than you had promised me initially. I want to end it with a lightning round. That's something I do at the end of these conversations. I didn't tell you about this before because I wanted you to be raw in it, if you will. But I'm basically going to ask you 10 multiple choice questions. You have like 10 seconds to answer each. Are you ready?
Yep.
Coffee or tea?
Coffee.
Mountains or beaches?
Mountains for skiing.
Football or hockey?
Football.
Books or movies?
You froze.
Books or movies?
Movies.
Early bird or night owl?
Early bird.
Beer or wine?
None.
Adventure travel or luxury resort?
Luxury resort.
Steak or burger?
Steak.
Dogs or cats?
Dogs.
Geophysics or geochem?
Geochem.
And then lastly, Toronto or Vancouver? Where would you settle if you could only pick one place for the rest of your life?
Montreal. No.
I like it.
Between Toronto and Vancouver, Toronto.
How come?
I hate the rain in the winter.
Fair point. Yeah, but there's snow in Toronto in the winter though, and it gets like minus
Doesn't matter,
75 Celsius.
you know. But I would definitely live in a place where I can be on the beach, because the mountain you can always go and see. So it's a tricky question, because I love both mountains and beaches. For me, the perfect world would be to have a place somewhere which is summer or all year long. You could have said, for example, the cottage life in north of Toronto, where we have our cottage, is not easy to. It's very difficult to beat. It's like being on Lac Como or
Wow.
Muskoka area can blow you apart completely.
Maybe
It's
we
like
should.
the northern state of New York. If you're a lake person and a cottage person, if you go north of New York, it's yeah,
Nothing
it's
beats
a
that.
match about everything.
Yeah. This was awesome. Charlotte, thank you so much for all your wisdom and your insights. I really appreciate it. And I'm looking forward to quickly catching up with you on YGT. But so thank you so much for doing this.
Thank you very much, Antonio. Have a great day.
Moving on, I'm going back to British Columbia together with Craig Perry, CEO of Vizsla Copper. That's a copper, gold, and molybdenum exploration company, which I've actually interviewed a few times already. There's even a playlist on the channel. I'll make sure to link it below or whatever for people who want a deep dive on the story of Vizsla Copper, as well as the story of Craig Perry himself. That's actually one of my favorite conversations this year, because it included a lot of things, like everything from farming in New Zealand to doing business with Russian oligarchs in coal mines. So that should be enough of a teaser for people who haven't watched it yet to do so immediately. And then come back, of course, to this interview, because there's 3 news releases that Craig, you and I have to go through today. Starting with the one from September 3, the headline of which reads, and I quote, Vizsla Copper expands Dearborn gold copper deposit with an intersection of 1.16 grams per ton of gold equivalent over 86 meters, which, unquote, which my calculator says it's a smidge under 100 gram meter intercept, which is, by the way, an equivalent. But about 80% of that whole intercept was actually gold. So it's a 0.91 grams gold and 0.18% copper for the whole 86 meter intercept. And that's in hole 120. With that intercept, or within that intercept, is a higher grade interval, though, of 1.07 grams per ton gold, and again, 0.18% copper. And that is a 1.32 gram equivalent for 68.5 meters, all happening at about 210 meters deep. Hole 121 and 122 have also come back from the lab since in a different news release, with the former showing 210 meters of 0.35% copper and 0.09 grams gold per ton. So that's a 0.4% copper equivalent. And then the latter, so hole 2122, showing a 0.77% copper equivalent. And these are showing copper equivalents because they're, again, copper biased, with 122 carrying 0.56% copper and 0.3 grams per ton gold. Now, the first hole that I mentioned, though, so hole 120, the gold biased hole, is apparently the first hole of this current summer drill program that's ongoing. It's also the reason why, Craig, you've decided to expand this current drill program from initially the plan was 3,200 meters to now 4,000 meters, and that's going to be in 10 holes, which my college level calculus says it's an average depth of 400 meters per hole. And again, as far as I understand it, a total of 8 of those 10 drill holes have already been drilled or had been drilled by the time you'd announced that news release. Probably have all 10 of them already completed. And so the remaining 2 holes at the time were supposed to be drilled at red gold and 3 furs. So plenty of assays to come for an additional 7 holes now. But Craig, in that first news release, you said that, and I quote, the high gold grades in the Dearborn deposit are compelling and maybe the key to future development scenarios at Woodjam, unquote. And then in the next news release, which was about, again, hole 121 and 122, one of the bullet points also says that what came out of the ground there would be helpful in, quote, various development scenarios being considered. Question here, though, is what future development scenarios are we talking about here exactly at Woodjam, Craig?
Well, thanks, Antonio, and great to be back as always. I think you do a tremendous job, and I love the level of detail you go into. I think it's very helpful for your viewers and listeners, and for all investors. So it's excellent work. And thank you for having me on. Yeah, good summary, very good summary. Obviously, we've had some fantastic results. The market continues to be fairly tough, and whilst we saw a little bit of a pop in share price, it hasn't been, commensurate with what we've announced, I think. So there's still a long way to go. We can come back to some of the market dynamics, but I think today is the best day on the market I've seen in the last couple of years, and I think we're sort of heading back to a more positive time. And we may see juniors really start to take off here in the not too distant future. Hopefully Vizsla Copper's at the heart of that. With good reason. The drill campaign we've just wrapped up. You mentioned development scenarios there. What we've tried to do, we've always known one of the reasons we bought Woodjam is these higher grade zones, particularly in Deerhorn, but also southeast, a little bit tantalising. The broader resource base there is roughly 270 million tonnes at about 0.4% copper equivalent. Quite a bit of gold in there as well. The global resource base at that grade is about 2 billion pounds of copper metal and nearly 1 million ounces of gold in the resource base. So we always liked that. We knew that, the paying $11 million for that, you can't really go wrong as metal prices start to take off. So we like that aspect of the project, the leverage it gives us to a rising metal market, particularly copper and gold. But we knew that there are these higher grade zones, and that higher grade zone at Deerhorn, there's a resource around that. Now, I should caveat this by saying all of this resource work was done pre-2013 by Goldfields. So, it's a robustly calculated, technically sort of well-calculated resource base there. So we had confidence in that. The high-grade zone at Deerhorn is about 33 million tonnes at 0.67% copper equivalent. So getting to that 0.7 grade, of course, what we do know is that the global average mined head grade for mines around the world in copper is now 0.6%. So that sort of grade is not too bad. But within that, around that, I should say, and this hasn't been factored in, Bill Morton and the team at Consolidated Woodjam drilled a smattering of holes between 2013 and when we acquired the project in 2022. It was roughly about 30 holes, but within that, they had some really spectacular hits. At southeast, the best of which was 51 metres at 1.6% copper, 0.84 grams per tonne gold. So you're sort of well north of 2% copper equivalent over a nice intercept there. Deerhorn, 110 metres at 2.6 grams gold and 0.4 copper. Again, really high grade hit. That drilling that Bill completed with the best holes, I think, on the property to date, has not been factored into the resource model just yet. So we wanted to do that, drill around those, get that into a position where we can now do a new estimation of particularly the higher grade resource, and we are drilling for higher grade material. We've seen majors come along in the province. Fortescue, for example, staked a huge swathe of ground to the west of our Woodjam property. It's an area, it must be one of the biggest staking rushes in British Columbian history. They staked a 300-kilometre long north-south by 50-kilometre east-west block of licenses, well over 300,000 hectares. Massive staking exercise. And I think what they're probably looking for are, sort of Gibraltar type, Mount Polly type deposits with, 1 billion tonnes plus at that 0.4% copper equivalent. I think that, if we just drilled the life out of the existing Woodjam deposits, we'd have a very strong chance of getting to that sort of level of that scale of resource. And that might be something that interests some of the majors. There's certainly been strong interest from several of them in recent times that we continue to talk to. We think we've got heaps of potential for that sort of, very large scale porphyry system. Things that point to that, the existing large resource base, the fact that we've made a discovery at the megaton target. We haven't found the centre of that or drilled it out yet. We've got some other fabulous targets. I'll come back to Three Firs, but we found something very exciting there that saw us extend the drill program. We've got another target that's a southeast lookalike, doesn't have as much overburden and much glacial till as Southeast does. So we want to get in and test that. This is called the Great Plains target, just to the south of Southeast. That could be another substantial porphyry system. So lots of potential for that mid-grade 0.4% material on the property, but the focus, of course, has had to be these high-grade zones. And I suppose, this program we've just completed has been the most important, I think, for the company in the last 10 or 15 years, or for the property in the last 10 or 15 years, because what it has done has confirmed that the high-grade zones at both Deerhorn and Southeast are wide open. At Southeast, importantly, it's reduced the depth to that mineralisation, that high-grade mineralisation, to about 60 metres. So that's very, very important for us, because it will add, very importantly, improves our knowledge and understanding of what the controls in these high-grade zones are. So it allows us to follow those up better. It adds, I think, it should add materially to that high-grade resource base. And then down at Southeast, importantly, brings it back to surface. And it also confirms that both Deerhorn and Southeast are open in the south and southwesterly directions. So that's a really strong outcome. And then I suppose there's a very long way of getting to your question about development scenarios. We engaged Ausenco Engineering back in March to start looking at very much internal scoping study type work, just to see what we really need, what more do we need to define to prove, to have a mining development scenario that will work in this next cycle. As we see, whilst I think absolutely we'll see $20 or $30 per pound copper, what works at $5 copper type of thing. So we've looked at all of that, come up with some numbers. We won't release anything publicly. What I can say is that it looks good, and always helped by improving metal prices. But I think, there's a very strong chance that we'll have an economic mining project in the future. You must caveat that, that's a very serious forward-looking statement, but I'm impressed with what we've seen there. So enough so to continue operations, continue drilling when we're ready to do that, which will probably be the sort of second quarter of next year, and continue on with that work. But I think that high-grade resource, the understanding of it, better understanding of the controls on the high-grade mineralisation, there's a strong structural overprint to these high-grade zones, particularly at Deerhorn. And we're really, I think we've sort of figured that out now. I've got an exceptional team. Steve Blower, of course, has a tremendous track record of exploration success. He's our Vice President of Exploration, but we also have the benefit of having Dr. Chris Leslie on board. And Chris has now become, I think, one of the world's leading porphyry experts. So having Chris there has been very, very helpful to us. And they're backed up by a team of outstanding younger geologists in the field doing all of that good work. So we're really coming to terms with what controls these high-grade zones. And I think very, very importantly, you mentioned up front some of the drill results that we've put out over the last couple of months. That the fact that those zones remain open, we're probably pleasantly surprised, particularly at Deerhorn, where to the south and southwest, these deposits, these high-grade zones remain open, and that's going to be important to us going forward. It gives us lots of targets to follow up and strong potential to add seriously to that high-grade mineral resource inventory.
Lots to talk about there. I do want to talk about the market's response and what else is happening in the meantime. I do want to talk about how these higher grade zones are structurally controlled, but let's maybe and talk to me like I'm 5 here, because I'm not too far away from it either. But what is this thing? Like, well, what's the internal thesis here? Because this doesn't look like a classic BC porphyry type of thing, does it?
Well, you're onto something there. Look, I suppose there are classic BC porphyries here in the portfolio and within this property. First thing I would say on to that is that, BC porphyries get a bad rap for all being low grade. Our thesis is a little bit different. Our first observation is that if you look at any of the BC porphyry copper and gold mines that have been developed or in operation now, they almost invariably started on higher grade cores that were mined out that paid back capital, and then they've continued on. If you look at some of the Taseko tech projects, Gibraltar and the like, Copper Mountain, I think that's owned by Capstone now. That those things are being mined economically at sort of 0.25% head grade. So that can be done. Of course, the capital on the development is sunk on those, so they don't have to worry about capital and payback of capital. But they're making very good money at today's prices at those sorts of low grades. So that's okay, but that's not what this is about. And to answer your question in a little bit of detail, what we found when we got out there is that these systems here are some of the porphyries on the property are a little bit different to other porphyries in British Columbia, in that here we've got both a mix of classic sort of calc-alkaline and then alkaline porphyry systems. And I suppose what we've noted that's different, but the first thing you see when you look at a map of ours of the wood jam area, the previous explorers over the last 30 years have tested about 7 or 8 different porphyry targets, of which 5 resulted in discovery. So that's very notable, and a very interesting outcome. As I say, I've been doing porphyry exploration for 25 years now. I cut my teeth, lived in Antofagasta in Chile, and explored the Andean belt for 2 years before moving to China and working in the Eastern Tethys, looking for Oyu Tolgoi lookalikes. So I've got a lot of experience in this, and seen a lot of targets generated, and it's pretty rare that a target you generate turns into a discovery. Well, here they just had an extraordinary track record, extraordinary strike rate of target to discovery. So that had us sort of tantalised, I suppose. That high grade zone at both Southeast and Deerhorn had us tantalised. Now, what we're learning is that there's probably a reason for this. You go back 250 million years, this must have been one hell of a volcanic center, with a very, very large stratovolcano in this area. The porphyries typically form at the base of the big stratovolcano. You have porphyry apophyses that move up through fissures around that, and structures around that stratovolcano, circulate and concentrate metal in them, then get unroofed. You end up with the porphyry rocks due to the unroofing of those porphyry systems. It's been a while since I've talked in detail about porphyry generation. And hopefully you end up with higher grades, and then you can get latter structural overprints, and you end up with this telescoping that people talk about, where you've got epithermal systems over the top of them. I think we might be seeing a little bit of that at Deerhorn with these structurally controlled high-grade gold zones. So that's interesting. And so we're working all of that out. But the other thing is recognizing that there's these alkaline systems. We saw when we first went out there's these very pink porphyritic rocks, cyanitic rocks. And it looked very much, quite potassic rocks, looked very much like North Parks to me. I've visited North Parks a number of times back when I worked for Rio Tinto, and Rio Tinto owned it. And the North Parks district, is characterized by a couple of things. There's, I think, over 30 or 40 porphyry apophyses and porphyry centers discovered in that porphyry terrain, of which three, I think, are sort of, large 200 million ton type deposits at 1.5% copper and copper equivalent. So, and they, we always know porphyries occur in clusters, but here you've got like a very serious cluster. So that intrigued us. Of course, when we got out there, we did a mag survey over the property as a very first pass, and we're a little bit astonished with what we came up with, in that. People talk about these classic mag-shaped magnetic donuts, magnetic donut anomalies. Well, we came up with 103 targets that look like that, discrete mag targets, all of which need to be tested, Antonio. It's a big job, needs a lot of money, and now's not the time to go and test all of those. But we did go and test one that looked like a sort of southeast style anomaly called Megaton. And, we've discovered a porphyry system there. We haven't drilled it out yet. We think we know where we need to go now to find the center of that system and drill it. But, we're 1 from 1. So I think the property now is about 6 to 8 target to discovery rate. So it's a fascinating part of the Earth's crust. Of course, it's in a mining district. It's in an area with, known progeny. If you learned endowment, if you look up, 30 kilometres to the north of Deerhorn, 10 kilometres away from our property boundary, you got the Mount Polly open pit. Mount Polly, of course, has been putting out some really nice drill results over the last year, 100 plus metres at 1% copper equivalent. So we're in the right terrain. I think, as I say, look, you've got to put out good drill results if you're going to capture people's attention. The low-hanging fruit is for us to drill and try and extend those high-grade zones at southeast of Deerhorn. We'll continue to do that. But yeah, it'd be nice to get out and have budget to test some of these other outstanding targets. This Great Plains that looks like a southeast lookalike just to the south of that southeast deposit. There's a lot of souths in there. That's an outstanding looking target to me. So I'm excited to go and test some of those things while we continue to try and expand those high grade zones, which I think we're doing effectively. Certainly this drill campaign has been the most important for us because we really started to hit our straps and figure out these controls on these high grade structures, start to test them better. But very importantly, we've shown that they remain open to the south. So I think we're a good chance of expanding those high grade tons in the next resource statement, which should come next year sometime.
Does the fact that phyllic alteration at some of these hits seems to be dominating worry you from a grade perspective?
No, not really. Not really. We do see potassic alteration in places as well. But phyllic is, of course, on the periphery generally, although you do end up with telescope systems, and particularly where you have something of an epithermal overprint, you may have very high grade mineralization running through a zone of phyllic alteration. So, no two are the like in a way. Deerhorn's very intriguing. There is a potassic core to that, and the higher grade zones are in the potassic core. But what we're seeing to the south is, you can get out of those higher grade zones and have strong mineralization. You can get out of those sort of central, typically potassically altered zones into more phyllic alteration. Might be worth just touching on Three Firs there because this is probably one of the more exciting things that we saw. The reason we extended the campaign, I think, we've now finished. We finished about 2 weeks ago, so we're now waiting for assays for those remaining 7 or 8 holes. Expected news release on this. It's not really market sensitive. It really, and we have talked about it in other releases, but what we found at Three Firs was tantalizing enough to see us extend that program by about 1,000 meters. And that was, you talk about alteration there. The reason we did that, we went down to Three Firs and drilled one hole. It's had a smattering of holes on a mag high. We suspected they might have drilled off to the side of something there. We did some ZTEM and IP over that area in the past and found that there's a chargeability high that sits to the north. So we went and put one hole in there. And starting from about 200 meters down, we started to see something interesting in that hole. And they are clasts of exogenous material, or exogenous rock has been moved in a breccia through that area of that drill hole. So you've got brecciated, a breccia with porphyritic clasts. Now those clasts were something intriguing, something we haven't seen on the property before. Really intensely potassically altered clasts. Veins within those clasts are the classic, higher grade porphyry signatures, A and B veins, the classic sort of veining, centerline veins, sutured centerline veins. And But within those veins and even in the country rock in those clasts, you're starting to see some bornite mineralization. Now we've seen a little bit of that, but not to the intensity that we saw in those clasts. If you look at the history of porphyry discoveries, one of the sort of bigger and better porphyries that's ever been discovered is a thing called far southeast or Lepanto down in the Philippines. That was discovered really by Dick Silito, and it's the same as what we saw here. He was looking at core from a hole that seemed to be off to the side or above a porphyry system, and within that he saw very strongly altered and veined porphyry clasts that didn't look like any of the rock that it had cut through, again within a breccia. So he hypothesized that there must be a well-mineralized porphyry system lurking there somewhere. I think they drilled, off to the side and deeper down, and indeed found Lepanto. I can't remember the tons and grade, Antonio, of Lepanto, but it's a bit of a beast of a thing, sort of, I'm guessing here, but probably 400 million tons of north % copper. So that, seeing that signature of mobilized rock from elsewhere in a breccia, suggesting that there's something big, really very, very tantalizing to a porphyry geo like me, and indeed a lot of other porphyry geologists who've looked at it. And Chris Leslie picked that up. Dr. Chris Leslie, he was incredibly excited about it. So we've gone back in, drilled some holes. Can't talk about the results just yet. Don't have the assays. We'll have those soon. But and I'm not sure that we've worked out where those clasts are coming from, but it suggests to us that there could be a higher grade bornite-rich porphyry system hiding in that Three Firs area. So that's a tantalizing target as well. We've got a lot to go on with. There's some really good targets here.
While we're in the topic of alteration, I want to go back to what you just released, because there's also epidote chlorite magnetite alteration that you've encountered. But going back to you having mineralization close to the surface, whereas typically what I'm used to seeing in BC is kind of low grade at surface and then kind of a deeper, higher grade core, as you mentioned. But so that alteration in combination with close to the surface grades, does that tell you anything about how deep and how well intact the core system might be here?
It's a very good question. I think to some extent, and I'd love to get Steve or Chris on with me at some point in time so they can talk about the detail of the alteration we're seeing. What can I tell you about that? I suppose, there's certainly been some erosion. Like if you look at Megabuck and Deerhorn, some of the mineralization starts from very close to surface. Of course, southeast got this shallow overburden of glacial till on top of an eroded surface. But it does suggest to us the fact that we're getting those sorts of grades close to surface and that sort of alteration suggests that it's a pretty well preserved porphyry system. Interestingly enough, we think that at Deerhorn there's been some tilting, and so the core of the system may not sit below it but off to the side, and we've seen some evidence of that. So it's a bit of a geological puzzle that I think we're still really working out, but we're making good inroads onto that with this program.
Could this be more of I'm way out of my depth here, but could this be more of a hybrid system or more of a base metal dominated porphyry, given as well the presence of the notable molybdenum anomalies here, something we don't see, at least not at this size, in typical BC porphyries?
Yeah, the moly, there is some moly there, but mostly these are copper gold systems. In the case of Deerhorn, you've got this very strong structural overprint that looks like a sort of epithermal signature to me. I might be a bit out of my depth here as well, and Chris would be better at answering this, but I think that's right. You've got this structural component and some epithermal signatures, and you're seeing more gold on that basis, perhaps higher temperature mineralization and higher temperature alteration. Southeast is a bit more sort of typical. It's copper rich, copper dominant system, although it can have some very high grades within that. I think on the moly, I might be wrong here. You might correct me, but our Poplar project is more moly dominant, and that's interesting. And that moly, of course, is looking very, very good. Hmm.
I do want to get to the Poplar project as well, because you've had some news from that as well. That's indeed where you have that Mali geochem anomaly. So we're going to talk about that as well. What's based on what you've seen so far? Again, as I said, the average depth of these 10 holes is about 400 meters. Would it be? Do you need to drill it deeper based on what you've seen so far, or would it be worth drilling deeper here?
It's such a good question. We've wrestled with this a little bit. I think, we actually kicked off the campaign at Deerhorn with a deeper hole to try and get a bit of a sweeper type hole so that we can get an understanding of the full column of mineralization all the way from the top right down through those high grade zones and out the other side, and just see, try and understand better continuity of mineralization over those zones, variability in mineralization and alteration, and then, the depth of the mineralization, because it hasn't been drilled that deep just yet. Unfortunately, there's a stonking great structure that runs through that, particularly that southern part of Deerhorn, where you've got the high grade mineralization. In one hole, we intersected about 30 meters of clay rich fault gouge, some of it mineralized, some of it unmineralized. But unfortunately, those clays really hampered our ability to get that hole done. So we pulled that hole and decided to just focus more on drilling across the mineralization and adding to the south there, across the high grade zones, and understanding that a bit more. I think absolutely over time, although I think, we have lower hanging fruit to get on with just at the moment, in terms of drilling out those high grade zones. Now that we've really got a bead on where they're going, how they continue. I think, which news release might it be? The one from 3rd of September.
First one, that's hole 120 that you announced there, yeah.
Yeah, that's right. We put some cross sections in there. There's a map, I think figure 2 is the drill plan. And this is what's important to me in terms of where we go and what we do in terms of drilling next. The first thing that stands out is that there's a lot of intercepts in that zone of sort of 300 meters north-south by about 200 meters east-west. A lot of 1% plus 1% mineralization that's been sampled by those drill holes. But very importantly, this southernmost drill hole where we hit 68.5 meters at 1.3 grams per ton gold equivalent, that's the southernmost hole that's been drilled in that zone to date. So it's completely open. So that's exciting. That's very, very important. I think we're a strong chance of adding serious tons of higher grade mineralization there. Time will tell. We've got to drill to understand that, but I think that was a very, very pleasant surprise. We're thrilled with that result. And then if you look at the section, you can see you see the sweep of the drill holes drilled from northeast to southwest. The southernmost hole is open, and then if you look at that section, it also means that zone to the southwest of the deposit, is completely open up dip as well. So I think we're a chance, and there's some drilling just to the north there that hit mineralization, much higher up in the column at about 100 meters from surface. I think that firstly, we've got to get back in. The most important thing for us to do now is to get in and test that area and see if we can't extend or close off that mineralization. But very exciting to find that it's open to the southwest in an up dipping direction as well, which gives us a chance of finding much more high grade mineralization closer to surface. And the fact that a lot of that mineralization's over 1 gram per ton gold equivalent, as I say, they're 68.5 meters at 1.3 grams per ton gold equivalent, that we put out there back in September. Outstanding result, best results we've had from the property to date, and very importantly, as I say, highlights the fact that we've now got a bead on the controls on this mineralization, where it's heading, and the fact that it's still open. So lots of potential for more results. A little bit disappointing, I can tell you. We put these out in time for the Beaver Creek conference. Beaver Creek, been going to that for 10 years now. I think it's probably really the most important mining conference of the year nowadays. You know, you have everyone that you need to see, including all of the big fund managers. Guys like Steve Lands from Franklin Templeton were there. Everyone you want to meet, and that was the most upbeat Beaver Creek I've seen in the past sort of 6 or 7 years as well. So that was good. You know, we put that news release out, and I think we got a little bit of a pickup in share price and volume on the day, but there was certainly quite a bit of selling into it as well, which is disappointing. You know, in a normal market, you put out 70 meters at 1.3 grams gold or 1.1% copper equivalent, and you usually see a really solid jump in your share price, but unfortunately we didn't. But that's okay. That's okay. It still means that we're a bargain, and now's the time to get in. And indeed, you know, you look at some of the other things that have been happening outside the drilling. Unfortunately, you know, I've had sort of material information that hadn't been released that prevented me from trading. But once we got those drill assays out, I was free of that, so I could wade into the market, and I bought a million shares on market 3 weeks ago. I'm half jokingly telling investors, don't buy just yet. I've got 2 more news releases to come over the next month, and then I'll be free to buy. So just wait until I've done all of my buying here in a month's time. And then you can have as much stock as you want.
That's something I do want to talk about. But you're bringing up following up drilling at Woodjam. Talk to me a little bit about that. What do you envision? Realistically, I know you don't know because it's a capital thing that capital is going to dictate your tempo based on what you've told me so far. But what are you envisioning? When do you go there? How much do you want to drill? And talk to me about that.
Yeah, look, the neat thing about the property is that it's, you know, such a good location, you know, grid power, paved roads across it, lots of logging roads. So you can operate year round there, but and I'd love to be at a time when we can do that and be launching a winter drill campaign. We're not there at the moment. You know, the market remains fairly unsupportive of junior companies just at the moment. That said, though, you know, we're starting to see things really pick up. As I say, I think today's the best day I've seen in the market in about 5 years. Things may be about to get easier. One observation, I like to quote my mate Bryce Roxburgh from Rugby Mining here. He's always sort of told me, you know, he's been through 4 or 5 booms now, aging him a bit, but you know, he makes the point that it really takes, you know, the mid-tiers the majors move up in price, the mid-tiers, and then you start to see M&A kick off. But it's really once the mid-tiers have started and developers have started to move, and gee, we're seeing that today. You know, 2 companies that I'm heavily involved with, Skeena, we're nearly at $14 a share, off from $4 earlier this year. Vizsla Silver just cracked $3. We're nearly $1 billion company at Vizsla Silver. Your viewers have got to look at that one. I think that's the world's best silver project. So you're starting to see those developers really take off. But Bryce's observation, it typically takes, you know, 18 to 24 months before it really starts to trickle down to the junior market. We might be there now. You know, those guys, the mid-tier guys and developers really started to move up about 4 or 5 months ago. So we're probably getting close to a time where juniors become more fairly valued. There's still some absolute dripping roasts and bargains out there. Spent a bit of time buying a lot of stock in a few companies this morning, actually, because I think that the worm's turned and things are really looking up for the sector, including the juniors. The other observation, you know, and we're starting to see M&A really kick off. This is a very long way of answering this question, Antonio, but we're really starting to see you know, people are writing checks again and new money coming in. That was the other thing at Beaver Creek. You know, a lot of investors there. And we saw a couple of new funds, including a fund, small fund, modest fund, but a new fund and new to our sector out of Florida. And there are a couple of people getting around like that. So I think, you know, money's starting to come in. One of the things I have been doing in the past 6 weeks is quizzing fund managers about fund flows. And if you go back a year, you talk to, say, Maurice Manova at Sprott or Chris Beer it was Chris CI Funds, or you know, everyone would tell you back then they're seeing redemptions. This time around, Beaver Creek and more recently in Europe when I was over there on a roadshow, people are saying they're starting to see funds trickle back in to their funds, investors trickle back in to their funds. So, and now you're starting to see outsized gains. I think that the dam's about to burst and we're going to see money come back into the sector in a major way, which is very, very exciting. Of course, the way to get a beat on that yourself is to look at the ETFs. I haven't looked at the SILJ and GDXJ lately, but I suspect they're starting to rise pretty strongly. So money's starting to come back into the sector, but the juniors still suffering. The other thing, sorry, one more observation on that front. If you go back a year, you put out spectacular drill results, very hard to get the market excited, and you know, you could put out the best intercept in the world, and if you weren't a Lundin and Philo, you might go up 10-20% on the day. A couple of things that we've seen lately, Mithril Resources, for example, put out a spectacular drill result there in their silver project in Mexico, and that's been a 10-bagger over the past month. Good story. That was the important takeaway from that to me is that the market's now starting to do what it traditionally does when you make a discovery, really ramp up the share price, really explode. Haven't seen that in a while. It's been a lackluster performance up until a few months ago. So you're starting to see money really come back into the sector. What I'm trying to say here is that we've got $3.5 million in the bank. We'll finish the year with a bit over $1 million in the bank once we've done all of the work on the ground that we need to do. Of course, drilling is not a cheap exercise, and you know, I see. I very rarely read the comments on things like CEO.ca. I sort of subscribe to Joe Rogan's point of view that you don't want to read the comments, but I note that a lot of people are like, well, you know, how dare you dilute shareholders? Well, I don't know how people think you can drill holes unless you raise money. And the way I avoid dilution myself is to write checks and maintain my position. And I'm happy to do that in this company all day long. And as I say, I'm buying on market, but you know, it's a long way of saying that the market isn't terribly supportive of juniors just at the moment. It's pretty painful to raise money down at these levels. I don't want to do it. We've got enough cash to get ourselves through Q1 next year. We may have to do a modest financing then, but we really want to get all of our news out, keep telling the story, and bide our time until the market picks up and better supports financing of drill campaigns like this. So that's the intention there. We won't drill this winter. Gee, we've got some targets there. I'd love to. We did a bit of soul searching, Antonio, 2 weeks ago. Once we've got the final results, look out for a news release on the IP from that Poplar South target. It's an astonishing target. We put out news of the soil anomaly over it. It's classic. I've never seen such a good porphyry target. Every single vector screams drill here in the center of that anomaly. You know, as I have been doing porphyry exploration for 25 years, this is one of the very best targets I've ever seen, where you've got coincident alteration in outcrop. There are some porphyritic rocks in outcrop as well. There's copper staining, little copper pits on the project, really intense alteration, particularly phyllic alteration throughout the zone. Big mag anomaly, 10 kilometers long, alterations 10 kilometers long. Right at the guts of that is a stonking great mag low, classic donut shape anomaly. We then went and did soils over the top of it and had really significant soil in copper and molybdenum in those soils, and then a classic ring of zinc in anomaly in soils around that. Just absolute classic soil GChem anomaly that you would typically get associated with a porphyry system. We've now completed IP over it, and I can tell you that there's a really very nice chargeability anomaly at the center of all of that, which is very exciting to us. So every single vector screams drill at the center of this. There's been a little bit of drilling in that zone, and certainly they picked up a copper mineralization and alteration, but they were very shallow holes, sort of RAB type holes down to about 30 meters, so they didn't test the target at all. So with all of that in mind, Steve and I were quizzing ourselves as to whether we should try and launch a campaign or just conserve our cash. And I think, chances of discovery there are as high as I've ever seen on any target I've ever drilled. The question of tons and grade, too early to say, but I think we're a good chance of finding another porphyry copper moly system there. I'd love to see that drilled, but I think, we just have to bide our time until next spring to get that done.
That's actually where I wanted to go with this. And then I made a note that we'll go back to talking about the market's reaction to your share price, the market's reaction on your share price to your news. But now to the north from Woodjam, that's what we're talking about here. That's where your one of your other projects is. So this is West Central BC that we're in now. It's named Poplar, and you've identified, just for people listening, wondering what you're talking about there. I'm going to put it up on the screen right now, but you've identified a strong copper in soil anomaly at Poplar South. That's important because that's to the south of where the resource on that project is. And you've now got copper moly and even silver soil geochem anomalies coinciding with your previously completed airborne geophysics. So that's the important part. And then the news release says that you're following it up again with a ground IP survey that you've completed. While you're calling it, again, is what you just said, but and I wrote it down to quote it, you're calling it the most compelling copper exploration target I've ever come across, unquote. Talk to me more about that, because it is early on. What makes this so much of a compelling target, given how early stage this thing is?
Yeah, I wouldn't say copper, although we know copper's in that system through the soils and seeing this copper staining in outcrop, but certainly porphyry target. There's almost porphyry sitting at the center of it. There's just too many vectors, too many conditions to say that it is. And if people look on our website, it's on slide 23. And as you say, Antonio, in that news release is a good summary of what we've got there. But, it's multi-vector target with strong alteration, but knowing that there's copper and moly in soils is a strong indicator that it's a mineralized system sitting below there. And then a very, very straightforward task to go and test it. We can probably drill it with 2 fences of 3 holes each type of thing. So low, ticks all my boxes in terms of how I assess exploration targets and opportunities in terms of size of the prize. We know that Poplar, nearly 300 million tonnes of mineralised porphyry there. Size of the prize, so big tick. Cost of the test, very, very cheap. If we drill in summer, it's really just drilling costs. There's a road that runs through that area, so fairly cheap to get out and test the target. It's a shallow target as well. You see that all outcropping phyllic alteration, so we know we're not deep in the system. We know that the system's somewhat exposed, and so we don't have to drill too deep to test the target. And then chance of success, very, very high. We're in a porphyry terrain, a lot of porphyries, a lot of endowment already proven up in that district. You've got our Poplar deposit, of course. There's the Stars discovery to the northwest of us. You've got the Huckleberry mine just to the south. You've got Surge Copper, and there are Utserberg and Berget porphyry. So we know we're in a porphyry district. I think, that's a very strong chance of being a discovery. Tons, grade, who knows? That comes from the drilling.
Why IP instead of just drilling it, though? I mean, given that you know what you know now, and we haven't seen the results for the IP, they're coming soon. I believe you told me to look out for that. But why did you have to run an IP, given that you had geophysics, airborne coinciding with the geochem anomaly?
Yeah, well, we do have some. There's an apparent conductivity that you see on that image, so we know that there's a conductive. Around that mag low, there's a conductive zone, but it really there is drilling is expensive, IP is relatively cheaper, and it all gives you further vectors to just better refine your drill target, so that you don't miss it. You drill in the right spot. And, we talked about structural controls and some of these systems and the like. So, there can be some surprises there. You don't want to, if you're going to test a target and you can cheaply better define that target, you've got to do it.
How's that project from a permitting perspective? First Nations, fishes and birds, everyone happy with you eventually potentially drilling it?
Yeah, absolutely. It's in again, in mining terrain. We're in a good location. There's, the road to the Huckleberry mine passes through the property, as does the grid power that goes down to Huckleberry. It's in Wet'suwet'en country. They've been in the news in recent years about pipelines, but this is relatively more simple. We've got we've already had drill permits granted for parts of the property and projects, so we know you can get it done and get in there and test things. And I think the First Nations people in the district are used to mining projects and supportive of them generally, and Huckleberry is a good example.
I really like that framework of yours, by the way, that you told me about last time or the first time we spoke, which is as you mentioned, so size of the price, cost of the test, chances of success. And I'm totally stealing it to make myself look smarter than I really am. So just FYI, now that I've told you that I'm stealing it, I should not be seen as guilty. But what I'm thinking about here is using that framework. If and when money becomes available to you, how do you split it between wood jam and poplar? Where do you go first, and which of the two gets more attention and more money?
You would ask that. It's something to wrestle with. Yeah, feel free to steal that. Like I love, one of my early mentors and boss at Rio Tinto, David Klingner, came up with that and transformed Rio Tinto into an exploration machine through those simple principles. And I love to hear people using it. More people are talking about it, of course, so it's great to hear. How do we, you go through, we always go through a ranking and prioritization process. Here we've got a lot of targets to rank and prioritize. I suppose the thing that's most important, the best bang for our buck, is to go after that low-hanging fruit around the high-grade zones at southeast that we haven't closed off, and Deerhorn where we haven't closed off the high-grade zones. So that's, we're a good, strong chance of getting good results there that add to the high-grade resource base. So that's always going to be priority number one. But the scoping study work that we did, I suppose, shows that it would be very advantageous to find, say, another 50 million tons at north of 0.7% copper at shallow levels on the wood jam property. So it means that we should, and we have compelling targets there. This Great Plains target looks outstanding. That whatever is lurking below 3 or around 3 furs that we see in those breccia class, that's a very, very valid target. So I think we're a good chance of discovery of more mineralization that adds materially to the development story there. So you've got to go and test some of those, budget allowing and markets allowing. And then you get an interesting one like this Poplar South target that screams drill me. So, we'll definitely be drilling that in the summer.
Well, and the market seems to be appreciating these results, although quietly. So no huge volumes in the stock, decent volumes that you've had, but you've moved from a low of 6 cents to a high of about 9 now. Still down from about 17 cents last December, though. And the thing I wanted to talk to you about that I made a note on is tax loss season, which is upon us. Again, for people not sure what that might mean, I just spoke to Justin Hayek. He's happens to be a friend of Craig here, but also he's my personal broker, about his clients and how they are dealing with tax loss season and the situation. The video should be around here anywhere for people to find it. But how are you going to deal with tax loss season, Craig? And do you expect much volatility here shortly?
Shout out to Justin Hayek. He's a mate of mine and one of the best, brightest young brokers here in Canada at Ventum Capital. Fantastic fella. Tax loss selling, frustrating. Interestingly, I think It might be a bit more muted this year than we've seen in recent years because there seems to be, we seem to have a market. People want to be long rather than, short and taking their tax losses. So that's interesting. We haven't seen that in a while, so I'm excited by that. I think personally for us, yeah, we might see a bit of tax loss selling, but I think a couple of things. We're very, very cheap. Our market cap today is probably 18, $19 million. And for that, you get 4 billion pounds of copper, nearly 2 million ounces of gold. Extraordinary buying opportunity as far as I'm concerned. I don't know. I think that the combined market cap of both Universal Copper and Wood Jam, the companies that owned our projects, would have been north of $100 million 10 years ago. So pretty straightforward to come into the story, wait for metal prices to rise, and follow it up on that basis whilst we do some of this other work. But so we're cheap. Hard to see us getting cheap, but can always happen. And then that last financing, we did $5.5 million. Some of that went to flow through funds, but it's guys that we know very well that want to be exposed to the copper story. I think, we could well see a little bit of selling, but I won't be displeased because, I should be free of any news that I've got and I can sit in the market and buy a lot of that stock if it does come out. So, there could be a little buying opportunity coming up here in a week's time. I don't expect it to be too severe.
You do also have a private placement coming free trading this week, actually, and a good chunk of that was flow through. Do you know who's holding those shares, and do you expect them to keep holding? Is there a level of control that you have over those shares coming free trading?
Yeah, look, some of it is, we took my partners and I took a good chunk of that placement, so that's all locked up really. We had a few new shareholders, absolutely, and certainly, the bigger checks came from some more serious funds that we know very, very well, that we talk to regularly. So, we'll be encouraging them to hold their stock on the basis of more news to come. The fact that we've now got more, particularly that Poplar South target to test, and I think you want to be long this market as well. The market's about to take off. Metal prices performing very well. Juniors are starting to move up and respond to discoveries. So, now's not the time to be selling. Now's the time to be pinning your ears back, backing up the truck and buying Vizsla copper. And that's what I've been doing.
That's actually a fair point because you have. And that's part of the thing that part of the questions that I had here is if there is additional liquidity coming free, though, are you going to be there to mop it up? And are you going to be so willing? Yes, you are, but able, as in, are you going to be blacked out? And does it happen so that there's additional liquidity? You want to mop it up, but you're blacked out and you can pick it up. Is that, or are you going to have the ability to be buying?
I shouldn't be blacked out here in the next week or so, and then I can buy, and you'll definitely see me buying. This is a bargain.
Yeah, that's what we've seen from you, and that's something that I do appreciate. How do you make money then off of this? I mean, there's because I like. So here's the thing. Obviously, everyone likes insider buying, but at a certain point, how do you know it doesn't become too much? Where at a certain point you have to go and sell, like selling the open market or cross your shares. So how do you plan to make money on these shares that you've been buying here?
Yeah, good question. Look, I have to be a longer term holder, and I've never sold a share. I've only ever put more money in. I think I've put about 1.5 million into the company of my own money so far, and continue to do that. I think we've got some outstanding. We've got a great resource base, outstanding targets, lots of opportunity to get more good results and grow that resource base into a rising market. That's how I'll make money out of this, is just riding that wave. And I can't be seen to be selling, so don't. Well, indeed, that's not the issue. I just want to own more of it. So, and then how, do you engineer an exit? I don't sort of think too much about that and things that I'm heavily involved in like this. I'd love to think that we'll be building a mine and we may well sell it or just go into production at some point in the next 5 to 10 years. And and sit. My kids can benefit from the dividends of the company down the road. That's that's how I see things. I suppose I've been very fortunate to have been involved in a few successes and not be too hard up for capital just at the moment, which is advantageous because it means that I can step in and help clean the market up and really own a lot more of a story that I know and love.
That is a great note to end it on, and it's a great aspiration to have, especially the kids part. So thank you for saying that. And thank you for being here too. But what am I forgetting to ask you, Craig? What should we be talking about that I'm failing to bring up here?
Oh, look, I think probably, the most sort of pertinent thing, of course, we've just been so badly beaten up in the market and in pretty much everything over the last bunch of years. We had that mini COVID boom in 2020, but things have been pretty tough outside of that. I would say that today, the way the market's looking, I just see green across the screen, and I see some of the things I'm involved in that I like that are really up very, very strongly. I feel like we might be at the start of the earliest of days of a boom. And if you go back to what I was saying about sort of 12 to 24 months before money starts to flow down in the juniors, well, the majors have been performing well for the past 12 months. I think we might be on the edge of a serious return to interest in the junior sector as well. So now's a great time to, and the copper price, of course, back in March hit an all-time high around $5.10. We're back at about $4.40 today. China is talking more and more about loosening monetary policy and bringing more capital into their system. That's, of course, a big driver. You're starting to see real data center demand in the US, particularly Bill Gates. Of course, Microsoft's now commissioned or bought that 3 Mile Island nuclear plant. That gives you an indication of what's happening there and their need for data centers, which, of course, have very strong demand for all the things that we have in terms of copper and silver and even tin. But copper and silver, I think, are where it's at in the next few years. And then look, the other thing about the copper market is that it typically picks up around this time of year, November, December. You see restocking in Asian markets, and usually you get a rally in the copper price then. So now's the time to really capitalize on bargains out there in the copper space, like Vizsla Copper. Great time to be buying, accumulate during the tax loss selling, accumulate as the metal price starts to rise. And next year, I think we're going to be in a hell of a bull market for everything mining, but particularly for copper and silver. And we've got a lot of it.
I hope you're right on that last part. I think everyone can appreciate it now, and hopefully that trickles down into the juniors as well. But again, Craig, this has been a great conversation. Thank you so much for investing your time with me today.
Antonio, always a real pleasure. I think, I love how enthusiastic and, your knowledge of the sector and the detail you go into. I think you're doing a great job, mate, and it's a real pleasure.
Thank you. Thank you so much for saying that, and hopefully speak soon.
Good on you. Thanks, Antonio.